And as usual, if you guys have any questions, you can also type in the chat box. I will try my best to answer all of you if you need some analysis while we are waiting for others to join us. Thank you so much for supporting us. I can also see a lot of greeting from the chat box. So hi Lalu, and then hello Ogechi Mohanad, and then Dean, Chandrakan, and Aminuddin. Thank you so much for supporting us for the webinar tonight. We do really appreciate on it. And before we start, you can also follow us on the Telegram group when you have time. Normally, we will try to update on a lot of latest market news inside the Telegram group. So a very short market recap, we will normally update there. So if you want to receive the latest market update on certain products, on the most biggest movement products, you can also feel free to follow us on the Telegram. So we will update it every day. And then sometimes we will also update certain thread of the day to provide some trading ideas for our clients, for the audience. So if you are interested to certain market update things, you can also feel free to follow us on Telegram before we start the webinar. Now we're going to wait for another 1 minute. Then hello Nicholas and hello Aminuddin. All right, without wasting any time, we are going to start our webinar right now. So for our webinar before we start, right, here is a small risk disclaimer for everyone. Today's webinar is intended for educational and informational purpose only, and participants shall not take it as financial advice or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Pure Prime and I hosting the sessions are not liable for any losses, damages resulting from the use of the information presented. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. And just a kind of reminder, Forex trading is considered a very high risk investment. So market participants shall be more aware of it and able to manage your risk management well. Okay, so just a very short risk disclaimer for you guys. And without wasting any time, we are going to start our webinar right now. So for today's topic, right, we will be discuss about the trading indicator. If you guys have joined our webinar last week we are the one who discussed about the candlestick pattern. We already show you a lot different types of candlestick pattern. But in order for you to enhance your trading strategy, it's quite important for you to combine most of the things together, including you can try to combine the candlestick pattern fundamental analysis along with the trading indicator. So the trading indicator is one of the key things that we will be discussed today. So we hope that after tonight's webinar sessions, you guys able to learn a lot of different types of major trading indicator. We hope that it can also help you for your trading journey in future. We will try to set up and teach you how to set up this kind of trading indicator, and then how can we learn or how can we observe from the indicator. So the first thing that we will discuss about is what is technical analysis. Mostly for today's content, right, we will mostly focus on technical analysis, not fundamental. So we will try to understand what is technical analysis, why is it very important for us to understand technical analysis, and then this is a 3 indicator that we will be focused tonight. So moving average, RSI, SL Ester, MACD. So this is all the 3 main indicator that we will be covering tonight. So the first thing is regarding on what is technical analysis. So to put in a very simple term, is technical analysis is actually try to forecast the future price movement by using historical prices. So to put in a very simple terms, right, it's like we try to see the price, how much it has been gone before, and then we try to monitor and try to predict in future it might be reached again, the prices. For example, you can notice from the technical analysis, the overall trends for the gold price are keep trading in a range around here between the resistance level of 2035 and support level is 2025. And then why after every time after it's hit 2035, it starts to rebound, retrace back, drop back, is because of 2035 is a very strong resistance level based on historical price movement. You can notice that every time gold price touch 2035, it starts to drop back. So according to technical analysis, there will be chances after the gold price hit the resistance level, it will be dropped. So technical analysis is normally use the historical price to predict the future price movement. It's mostly based on the charts, based on of the price movement. Okay, normally it's better for us to combine everything, including the fundamental analysis combined with technical analysis. You can use certain technical analysis, including the candlestick pattern, indicator, combine everything. Fundamental is one of the key things that we need to understand on what's going on in the major market. What is the big trends for certain products? Is the story of that product is very positive or negative? So fundamental side is very important. For example, after you fully understand fundamental things, then next thing you want to do is you want to choose a very, very good entry point. And then you can consider where you need to set your TP level, where you need to set your stop loss level. So how can you know it? It's through technical analysis. To put in a simple term is fundamental is for you to understand the big trends. Then after that, by using the technical analysis, it will able to let you understand what is the good price for you to enter. Okay, and then what price that you can consider to put your stop loss level, your TP level. So this is normally how we combine fundamental as well as technical analysis together. Some people might ask which one is very important, fundamental based or technical analysis is important. But in my opinion, sometimes both of them are very important because you need to fully understand what's going on in the market news first. Then you can use the technical analysis to find a good entry prices. The first thing that we will be covering is moving average. Moving average seems like a very confusing thing, but it's actually not that difficult. Moving average is actually just like it's used to help to level the price data over a specified period by creating a constantly update average prices. So to put in a simple terms, right, moving average is just considering the average price movement, like historical price movement. For example, if you normally notice on the 12 moving average, it means that it's actually calculate the average prices of 12, the previous 12 candlestick. Later, I will let you to understand more on it about the moving average. So the usage of the moving average is after you have the moving average, right? It's normally like a line one. There is a line, like for example, this three line. So how can you use this three line to have a very, very good price predictions or your technical analysis thing? Okay, so the main use of the moving average of this line is to normally to determine the trends and signal from crossover, whether there is suddenly a trend reversal or not. And then if you can also use the moving average to find their support and resistance level. I will guide you later. Okay, so you can see that after you show that all the moving average, we do have 20 MA, 60 MA, and 200 MA. So to put in a simple term, is 20 MA is like the short-term period. They use 20 historical average prices of the candlestick. Then they will form a line like that. And then 60 MA is actually use the 60 periods of the candlestick pattern. Then they will form an average price. And then 200 MA is actually the 200 previous candlestick average prices. So after we do have all these prices, right, then we can fully indicate on how can we identify the big trend. So to put in a simple term is, now we are trying to understand what is the MA crossover. So MA crossover is normally used to predict whether there is any trend reversal or not. For example, normally if the overall trend is go down, when is the good time for it to rebound back aggressively? So this is a time where we can use the moving average to predict it. So when the short-term line is above, long-term line is below, if there is a cross like that, it means that it's a very, very good bullish crossover. But if the overall long-term line, for example, the long-term line like 60 MA is above, but short-term line is below, then this is a time that bearish crossover. But to put in a simple term, I will put it in a real example. So normally, right, before the trends, the short-term line, short-term is the 20 MA line. Short-term line, right, normally is keep going down. Then 60 MA is also going down, the longer term line. But we need to monitor when will be the chance of the trend reversal. How can we monitor it? Is when these 20 MA lines start to have some crossover above the 60 MA. So when this thing form, right, it means that this is a good time for it to increase aggressively. So this is how we predict any trend reversal. So to put in a simple term is when short-term line cross above the long-term line, 20 MA cross above the 60 MA, then it's a chance for you to consider a nice bullish trend reversal. But if any chances that the short-term line cross below the long-term line, here is the example. You see that after that, 20 MA is already above, right? 60 MA is also going up. But when the 20 MA, the above one, the short-term line cross below the short-term line, the long-term line, then it means that the trends for this USD/CHF is going to drop. So normally we use the MA to determine any trend reversal. So when you see the cross, it means that there will be chances for it to have some trend reversal. I will show you more example later and then guide you how to do the charts. So you can notice on another example is normally, right, you can see that the short-term line, the red line is above, but suddenly after it's crossed below the long-term line, overall trend reversal is clear and then it starts to drop aggressively. So here we are going to use the real life example on certain product. I will guide you on how can you do the charts. So let me find any interested product you guys want to know. If not, I can just simple put shift one product. So for example, maybe we'll discuss more about the NZD/USD products because you can notice on NZD/USD, you experience a significant volatility. So how can we set, this is the MT4. For those who are not sure, you can actually just download from our PurePrime platform. This is the MT4. So if you remove all the indicator here, I will try to remove everything. Then I will try to add everything inside. You can see that this is a pure chart. So the first thing we need to learn is how can we set the MA line. Okay, so the first thing you need to do is you need to go to insert, then you need to go to indicator, and then you need to move on to a trend. Then there is a moving average. Don't worry, most of the MT4 do have this kind of setting. So those who are not sure, you can just screenshot what I've been showing you now. So after like go in insert indicator, trends, moving average. So after that, you click the moving average. You can see that you can set the periods over here. Right? So normally the short-term periods, right, we put on 20. Then after that, you can add on more longer term periods. So we assume we set a short-term period first, which is the 20 periods. Then we set it as a red color. You can change everything. You want any color you want also can, but normally I prefer red. And then you can make the line thicker. Then after that, you click OK. So after that, right, you can see that the first line, the MA20 or the short-term line already successfully formed. So next thing we need to move on is we need to consider another line, which is the long-term line as we mentioned just now. So the things is still remain the same. You just go insert indicator, trends, moving average. Then here, you just change to 60. But you need to remember, you need to change the color on here. So assume we change to green. Lime or green color. So you need to understand that 60 period is a longer term candlestick. This is the thing you need to change. One is 20, one is 60 for you to predict any trend reversal. So after that, you set everything right. Then you click OK. So after that, you can notice on it. So the line already nicely formed. So you can see your previous trends. Overall trends for the NZD/USD is keep going up one. But by any chances, the short-term line, which is the red line, cross below the long-term line around here. Once it's crossed, right, you can see overall trends for the NZD/USD actually drop aggressively. So this is the example. So trader will normally monitoring on the charts around here. Once they notice there is any crossover, combined with others like candlestick pattern, you can see that this is actually a combination of the crossover first thing and then candlestick pattern, which is what we call the inverted hammer candlestick. So you can see that this candlestick, you can see the candlestick of this one. You see the shadow is very long, but the body is very short. This is what we call the inverted candlestick pattern. It's actually combined. One, you see on the cross signal, bearish cross signal, but normally it's not for you to like very, very nervous to enter to do trade yet. You need to find another things that can support you. So the next thing that the trader find maybe is the inverted hammer candlestick. Once it formed, we can have more confidence that NZD USD should be dropping further. Okay, so this is one of the good example of combinations of candlestick pattern as well as the crossover. So you can notice this is one of the good example when the short-term line cross below the long-term line, it starts to show some bearish momentum. So the next thing that we can monitor on is regarding on other trend. Let's see whether there is any clearer trend reversal. Maybe we can look on the oil market. Or maybe let's see. So you can see that this is a USD JPY. Here is also another one of the good example. After you set everything right, so red line is a short-term line, blue line is a long-term line, long-term period. So when the short-term line break below the long-term line, which is what we set as the 60 period, you can see that one is break below, it starts to drop aggressively. But after that, it's rebound back. So normally trader will try to find their best any turnover reactions. So these are of the example, and then previously we also have the example for the USD JPY. Let me show you. You can see that here is a very, very nice and clear example. This is the one that combined with some fundamental analysis one. Okay, so you can see that this is a USD JPY, and then red line is the short-term line. Normally it's in up one, and then blue line is a short-term, longer term line. It's going up also, but when it keep going up, some trader might want to do some trend reversal. So what they do, right? So they need to find and see whether there is any crossover. So when you can notice on here, when the short-term line normally is above one, but after it successfully break below the long-term line, which you already call the blue line, it starts to drop aggressively. Okay, so after it's drop right, then we need to find another trend reversal. So when can you consider another long positions? Again, so you need to continue monitor the line here also. So now the red line, the short line is below. So if you want to do some trend reversal, then you want to find a good crossover also. So where is a good crossover? You can see that normally red line is below one. Then after that, it starts to cross over above. Sorry, I draw it clearer. It starts to cross over above this blue line. Then you can see that overall trends for USD JPY increase aggressively. So the key thing for the MA line, why is this very important? Why is this MA crossover is very important? Is because you want to try to determine any trend reversal, any chances of the trend reversal. So you need to remember any crossover of the short-term line towards the long-term line is a very good buy or sell signal. So for example, if the short-term line cross below the long-term line, then it can consider sell. But if the short-term line at below one normally, then after it cross above the long-term line, then it's a very good trend reversal signal. You don't have to memorize any short-term line, long-term line, this kind of thing. Right? You just need to understand how to set it. Then normally you can see that if the line is like that, like short-term line or red line is above one, but suddenly there is a crossover, then this should be the chance for you to consider a trend reversal already. Similar with the below one. Normally red line is below, blue line is above, long-term line is above, then suddenly there's another crossover. Then maybe this is the time for you to consider trend reversal trend. Okay, so you need to remember any crossover might be a chances for you to considering trades also. So this is how we understand how we use the MA line. So you need to remember how can you set it. You don't set it badly, like because the 20 periods, the 60 period is the crucial step. So you don't have to like confuse. First one, you need to set at 60 period. Then after you set it, you change to 20 and you change with another color. So you set it again. So you use the same step but set with two lines. So I hope I clarify about how can we trade with the MA line crossover. And then normally, right, the MA line can also use as a support and resistance level one. And give you one of the example is here. You can see that here. You can see this red line is what we call the support level because normally, right, every time the candlestick touch the red line or the short line around here, they touch, they rebound. So they touch again, they rebound again. So any chances that the latest candlestick drop below this red line, you can see that it start to drop aggressively. And then after that, the latest candlestick break again and drop double breakout line is what we call. First short-term line is break below already, then long-term line is break again. Then you can see that overall trends drop aggressively. So MA line is also can use as considered like the support and resistance level. Okay, so after it's break below the support level, it drop aggressively now. So then here it starts to rebound back, and then testing on the resistance level is what we call the green line here. So after it's testing, you can see that after it's testing, and you can see the shadow nicely form on the above the line. So after it's formed, right, it's indicating that it failed to break above the resistance level, it continue to drop again. So we need to wait lah. When will the latest candlestick break again the support, break again the line? So the example should be around here. After it's experienced some double breakout, it start to increase aggressively. So normally a very short-term trader will use this kind of charts to trade. They base on the MA line as well as a support and resistance level to trade on it. So it's not just a trend reversal, which what we call the crossover thing. You can understand from it. You can also combine like the resistance as well as the support level for you to trade when you use the MA line. It's very short-term trades. For example, a lot of traders consider long after it's hit the short-term line. Then TP short long again once it hit. Then after breakout, then they consider another position. So this is how we measure it and how we use the MA line crossover. So the first indicator we already done regarding the MA line. If you guys don't understand on certain things, you can also feel free to type on the chat box. I will try my best to answer you. So the next thing that we will be cover should be on the RSI. RSI seems like a very complicated name, but it's actually very simple. It's just for us to determine what is the overbought sector under bought sector. So this is the key thing that we can understand on it. So the definition, I'm not going to explain it deeply, but I will try to teach you how can you use the line. Okay, so when you have the RSI, normally RSI is like this one. Later, I will show you on the MT4. So every time, right, you can see that the blue line around here, we do have the blue line and then the yellow line. Normally, you can just focus on the blue line. So every time, the blue line keep consolidate in the range one. But any chances, right, if this blue line touch or break below the 30 level, here is the 30 level, break below, it means that this should be one of the consideration of the currency, the pair is already in oversold territory. Oversold territory means that it's a very cheap price, and then it might be a good consideration for you to do some trend reversal or long it. So you can see that after it touch here, it start to increase aggressively. But this is an indicator that, of course, sometimes it's not like 100% guarantee one. So this is a key thing. This is one of the example. Once it reach oversold territory, it rebound back, and then once it's break above the 70 here, which is what we call the overbought territory. So when the thing is overbought, too much people is going to buy already, it's already in the peak, then maybe it's time for you to sell. So when you notice on the blue line, touch or even break above the 70, which is what we call the overbought territory. So it's a time for you to consider the trend reversal. So what you need to do, the next step is you can consider a short positions. So you can see this is the example. When it's hit here, it starts to drop aggressively. But of course, if everyone use this indicator and able to earn money, then there will be no poor people in the market already. So I will also show you some of the bad example. You can see that normally this should be a very good oversold territory. You can consider long. Then it might start to rebound back according to the indicator. But this is a bad example. Even though it shows it's already in oversold territory, but they do not increase, and yet they start to drop back. So normally this time is maybe due to some fundamental news or others important factors that are impacting the market. So even you fully understand all of the indicator, you know how to use the MA line, the RSI things, but of course, you cannot 100% just follow it. We need to combine with a lot of different things together. So one indicator normally is not enough. And then some clients or some people might keep asking, what is the best indicator to trade? In my opinion, I don't think there are only one best indicator. Sometimes it's better for you to like combine everything. So it hopes that it can enhance your trading journey. You can combine it with indicator, different set of indicator you can combine with the candlestick pattern all together. Okay, so this is one of the example. Next thing that we will going to teach you on how can you set up the RSI in the MP4. So right, and we are not going to use the trading view, even though trading view look nicer sometimes, because some clients may not register with trading view. Normally, a lot of clients will trade with MP4. So I will guide you on MP4, make it like simple for you. But the tools, their formula, everything is the same one. It's just like not as beautiful as the trading view. So let me show you how can you find the RSI. So same thing, you go to the inserts, go to the indicator, and then you go to custom, and then after that, you can find the RSI over here. So it's already built in your MP4 one. Once you download MP4, you will have the indicator already. So just now, right, we mentioned about the MA line. MA line is in the trend, then moving average, but RSI is in custom, then RSI. Okay, if like you want to learn, maybe you can also screenshot on it. So maybe it can help you to find. You don't have to go through everything one by one. So just go to custom, then you click RSI. So click OK. So it will be formed. You can see that it's only on the blue line. Then this is overbought territory. This is oversold territory. So here is the example. One, it reached around overbought territory. It start to drop aggressively. And as for now, right, you can see that the RSI already short NZD/USD in oversold territory. Maybe this is a time for you to consider long. Maybe, but according to the indicator, yes. But according to the latest fundamental for the New Zealand dollar, it's actually no. It's actually a mixed signal. So when there is a mixed signal, it's really sometimes not recommend for you to focus on it. It's better for you to wait for some clearer pictures on it. So the trading strategy for the NZD/USD, if you want to have a very, very safe purpose, maybe if you want to trade on the oversold things, maybe you can have some patience, even though it's already in the oversold territory. But if you want to have safety purpose, it's better for you to wait until it's dropped again. Maybe once you reach the support level of 0.6055, it's a very good entry point for you to consider trade reversal like a long position. Because if you wait until here, your risk and reward ratio is very, very good. So to put in an example, why is the risk and reward ratio is very good? Because here is a very, very strong support level, and the indicator already shows some oversold territory. So maybe it's a time for you to buy. But when you buy here, there will be chances for you to draw aggressively again, maybe reach the support level 40. But your TP level is still unclear. But once you wait until it's reached the support level 0.6055, then you can consider long. Then your TP level, your stop loss level can just put below 0.6055 around here. So once you consider like that, your TP level is actually much better. Your risk and reward ratio is better. So if TP level, maybe you can consider on the support level around 0.6150. This is a very, very good risk and reward ratio. And then you can also combine with the RSI indicator according to RSI indicator. Okay, so this is how we normally do the trades and then analyze the market. Like it's not just like you see the RSI is already in oversold, then you just buy. It's not recommended. It's not cannot, but it's not recommended in my opinion. So sometimes it's better for you to combine everything. Okay, and this is it. So now I've already let you guys understand on the RSI. I hope it's clear. RSI is very simple only. You just like once you reach around the oversold territory, which is below 30, you can consider long. One is hit the peak, which is above 70, the line above here, then you can consider shorts. Okay, so this is how we analyze on the RSI. Simple. And then next thing that we will be covered is on the MACD. So MACD is one of the also very important things that in the market is very good for us to understand. And then there are three usages of MACD. We can notice on there is a histogram, crossover, as well as divergent. You can based on these three things to trades. And then this is one of the example for the MACD. MACD is very simple only. It's just like you can monitor on the histogram should be just nice enough. So when you look at the histogram, let me show you the clear example. You can look at the histogram. You can see when this histogram, right? The histogram means the green color histogram here. When you look at the histogram, right? You can see that if the histogram become higher and higher, because here is very low, then become higher, then higher again. It means that this is a very, very good increasing momentum, and then there is a very strong upward trend. But If the MACD become lower and lower, right? So it means that the bearish trend should be start and there should be a bearish momentum. But normally when you want to use the MACD, right, it's better or advisable for you to consider the divergence. I will teach you the divergence later. But before we touch about the divergence, we will touch about the simple things first. So another example is here. Sorry. Okay, so another example is here. You can see that when you look at the histogram as well, or the blue line here become lower and lower, or the short-term histogram, the histogram below is become higher and higher here. It means that this is a very, very strong bearish momentum. Just look at the line. If it keep going down, then it means that the momentum for sell is very strong. Then it's very good short positions. For example, here, you can see the MACD keep going lower and lower, right? So maybe it's a time for you to consider shorts in future. So this is how we analyze the MACD. Then now I'm going to guide you on how can you set the MACD here. So same thing, you go to insert, indicator, custom, and then here is the MACD. You just click it, click OK. So MACD is going to form. There is no a lot of complicated line, just show like red line as well as the histogram. But it's same thing that you can use on it. So you can just look at the histogram. When the histogram is below or -0.1, right? And then the histogram become lower and lower, it means that the selling momentum is very, very strong. It's time for it might be increase the chance for it to drop further. So according to the histogram. So this is how we analyze on the MACD. But normally MACD is not as very, very accuracy. Normally, right, trader will use the MACD to determine whether there is any divergence. So divergence is very quite accurate indicator. So by using the divergence, we're able to understand whether it's a positive trend or negative trend. So what is divergence and then how can we use the divergence? Divergence is very simple and then it's quite accurate. So here, first thing that we are going to talk about is positive divergence. So positive divergence, right? You can notice on the trend reversal like going upward, like when there is a positive divergence have been formed, then maybe it's the time for you to consider a long positions. So when is the positive divergence formed? It's very, very simple. The first thing you need to monitor is on the candlestick. You need to look at the candlestick. If the candlestick is in a downward trend, this is a candlestick chart, the price for the candlestick. If the candlestick is downward trend, but the MACD is going upward trend, and then once it's formed any trend reversal candlestick, then it's a time for you to consider your long positions. Okay, so here is the real example. So you can see that overall trends for the candlestick is keep dropping one, but any chances that the MACD keep going up, you can see that the previous low is much lower than the recent low. So when there is a curve or there is an upward trend in MACD, it means that there will be chances for it to experience some trend reversal. So this is how we monitor the divergence. You combine with the candlestick pattern with the MACD together. And then this is a negative divergence. Negative divergence is just difference. It's like when the candlestick is going up, MACD is going down, then it's a time for you to consider short positions. It might be going down in future. So here is the real life example. Candlestick going up, but MACD, the previous high is much higher than the recent high, is our trend. So we can consider short. Then after that, once this line turn curve below, it's going down aggressively. So this is how we monitor on the divergence. Okay, this is also another example. Going up, but MACD is going down. So a strong divergence, negative divergence is formed. So yeah, this is how we use the MACD. Let's see if there is any, and just a friendly reminder, positive and negative divergence is not a very, very easy indicator for us to find. Normally, it might be formed sometimes, but normally they will not. So let me see any good example. So far, we still can't find any example yet, but you can try to monitor the chart. Normally, this is very difficult for you to find, but once it forms, it's very good for you to consider some trend reversal trade. The profit on it is not that bad when you use the divergence things. Okay, you can try to find it, and then I hope it can help your trading journey in future. Okay, so this is how we analyze on the MACD divergence thing. So we already covered three most important indicators in the world. First is regarding on the MA line. If you guys still remember, just a quick recap. MA line, it's just that we need to find any crossover. When you look at the crossover, there's a crossover, the short-term line suddenly crossed above the long-term line, then it's the time for you to consider long, or there is a chances for trend reversal. But same with the here, when a short-term line cross below the long-term line, any cross, then it will show you that there will be chances for another trend reversal. So MA line, you can just focus on the cross thing to determine whether there is a trend reversal. Then after that, you can try to use it as a resistance level as well as the support level. And then RSI is simple. You just look at whether it will touch oversold or overbought territory. When you reach below 30, it means that it's already oversold. Oversold already means there will be chances for it to experience some rebound. Same go with the overbought. So once it break above 70, maybe it's an overbought, and maybe it's a time for you to consider there might be a trend reversal. Okay, MACD is used the histogram to determine the positive divergence as well as the negative divergence. So this is all key indicator that we can learn, and then try to combine everything with the indicator along with the candlestick pattern and fundamental analysis. So this is here with our end of our sessions. And now I'm going to open for Q&A sessions. Anything you guys want to ask can also feel free to type in the chat box. I will try my best to answer all of your questions. And then before we end and before I answer a question, you can also just promote for our Telegram group. You can feel free to follow us on the Telegram. We will normally update on the latest market news inside. So we hope that can enhance your trading journey. Okay, so now I'm going to open for Q&A. Deborah is actually asked about the live trade right now and apply this. Actually, we cannot do live trade due to some compliance issue. So normally for the webinar, it's only for educational purpose only. So we really hope that all these things can able to help you to enhance your trading journey in future. You can try to combine everything we have been teach you. So the reason why we cannot do live trade is because the webinar is only intended for educational purpose only. It's not like make everyone quit real quick in a short-term periods. Okay, so I apologize for that. And any question you guys want to ask? If not, we are going to end the webinar right now. All right, so I assume no questions for everyone, and then that's it for today. Thank you everyone for your support. We do really appreciate all of you. And then thank you so much. We really do hope that you learned something today. Good luck for your trading journey in the future. And once again, thank you so much for supporting us. Thank you. See you again next week. Yeah.